Hi, we have all at some point used PayPal to buy something online, right? PayPal really did revolutionize the online payment processing world. And today I'm going to dive into one of the most successful tech companies of all time. Hi, if you're new, welcome to my channel. My videos are about investments that anyone in the world can make. And today we're going to be diving into PayPal. And I thought at first it would be interesting to rattle off a few interesting facts about PayPal before I get too far into the analysis. PayPal ranks 73rd in total website traffic in the world. That's pretty cool, as we don't think of PayPal as a frequently used website. PayPal is available in 202 countries in the world as well. In the online payment processing space, they have over 80% market share. And I think this is just a fun fact. In 2013, they accidentally credited a user with, well, that huge number there, which is $92 quadrillion. Needless to say, it was a mistake. But imagine seeing that in your account. So my plan today is to go into a little bit of a background into the company, and then we'll go and see what the future looks like. And after that, we'll go into the financials of the company and decide whether it's a good investment or not. So we'll start with the background. Now, the company has actually a really rich history, and it's actually a very complex one as well. So I'm not going to be able to cover everything in and keep this video under 15 minutes. So I apologize for that, but I'm going to hit on the topics that I think are most interesting. All right, so let's start at the start. And the company's first handful of employees are now a very famous group of people. You got Peter Thiel, who took the company public and was a very early investor in Facebook. You got Elon Musk, we all know him, Tesla and SpaceX, of course. Reid Hoffman, who's the founder of LinkedIn. Chad Hurley, Steve Chen, and Jawed Karim, who founded YouTube, funnily enough. And Russell Simmons and Jeremy Stoppelman, who founded Yelp. That's a pretty impressive starting core of people who got PayPal going. We also have to remember at the time that it was quite a revolutionary thing. To be able to purchase something online and have the trust that you were not going to get stolen from, well, it was a big problem to solve. And in those early days, it was really hard for people to trust a website when they were giving away their credit card information. So we must give a lot of credit to PayPal for really changing the world. The trust required to make payments online, well, that was just a massive barrier for people. And now we make payments online all the time, and we don't even think about our credit card information getting stolen. One of the big moves in the company's history was back in 2002, eBay actually acquired PayPal for $1.5 billion. For about 12 years, the companies were actually one, so it took until 2014 for the shareholders of eBay to decide to spin off PayPal once again and become its separate business. This was an important move in the investing world because now PayPal could be valued independently of eBay. Because before this event, well, you had to value eBay and PayPal as one investment. So PayPal has been its own company again now for about 6 years. Check out the active users graph of PayPal. This shows an incredible story of how PayPal has been able to bring users onto their platform. Everybody knows PayPal. While they do face competition from a variety of smaller rivals, very few have the potential to rival PayPal's trusted network and scope. And if you spent any time studying Warren Buffett, you'll know that he looks for a company that has a really strong moat, like a moat around the company. What he means by that is how difficult is it for the competition to be able to take market share away from PayPal? And at the moment, I think the moat is actually pretty big and intimidating, but it doesn't mean it's going to stay like that forever. I think the marketplace is fierce. You've got Stripe, Visa, MasterCard, Apple, Google, Alipay, you've got Amazon, you've got cryptocurrencies. Well, a lot of these work with PayPal, but a lot of them are competitors as well. And I think this is what my big concern is when looking at the future for PayPal. I know that PayPal has been able to grow really well for a long time, but I get a little nervous about the competitive forces. All right, now I want to talk about this from a little bit more of a personal perspective. See, I personally don't actually like PayPal. It frustrates me every time I try to use PayPal, and I travel a lot, so I'm always getting locked out, or my payments are getting delayed or something, and there's always something. Now, I get they're trying to be the most secure payment processing system out there, and I would obviously be a lot more frustrated if I got stolen from. I'm really just turned off from using PayPal, and I've actually just shut down all of my accounts because of all the dramas that I was having, and I don't think I'll be using them again. And I know I'm not the only one because my friends have had similar experiences with PayPal and they really don't like it as well. I'm sure I'm just in a minority about this, and I'm trying to not let this influence my decision on whether it's a good company to invest in. So I'm just going to be focusing in on the financials and the future prospects. And what I really do like about PayPal's future prospects is their big moves into Asia and South America. PayPal recently acquired a company called GoPay, which gives them the opportunity to expand into China. It is the only foreign company so far that's been able to obtain a license for processing payments online in China. Again, there's some serious tough competition here with Alibaba's Alipay, but China is a gigantic market. PayPal also partnered with a company called UnionPay, which is the largest credit card provider in China. So PayPal, they're making big moves and the potential is actually massive. They've also been making these strategic partnerships in South America as well, and they're looking to aggressively expand into this region. The network effect of these partnerships is going to be difficult to measure until a few more years have rolled on. But I really like how PayPal has been very aggressive and proactive in moving into areas of the world with big populations. So on one hand, I don't like PayPal personally because I travel a lot and the marketplace that they are in is ultra competitive. But on the positive side, they already have done a lot of the groundwork. They are trusted and they're making big moves into the areas of big population. So now let's look into their financials to see a little bit more of what's going on. And there are three key areas that we're going to look at. We're going to look at whether they can handle their debt, whether they're growing, and whether they're a well-managed company. Now, we want to see the company pass all three of these areas, and it's going to take a little bit of experience to understand what the financials are actually telling us. So I'm going to give you my best overview. And I developed this criteria from studying the legendary investors Benjamin Graham, Warren Buffett, and Bill Ackman. And of course, just sit back and don't worry about the terminology. Just try to get a feel for what's going on. First, we're going to look at whether they can handle their debt. And it's really important to look over the company's debt because we want to make sure that if something unforeseen happened and their business was to completely stop, well, then we know that they're going to survive. So to see if the business can handle its debt, we're looking for low debt. And I'm going to look over the debt to equity ratio and the current ratio of the business. And for PayPal, this graph is actually a little deceiving. At first glance, it looks like they have a lot of debt at the moment, but the y-axis is actually really low numbers. I want to see the debt to equity under 0.7 and it's only 0.29, so it's actually good. For the current ratio, I'm actually looking for above a 1.5 and PayPal's is a 1.43. Now, considering the low debt to equity ratio that we looked at just before, we can actually still give PayPal a pass here. So for future reference, it's actually really good to look at these two numbers together. Now let's see if they're growing, and we want to invest in a company that is growing, right? Consistent growth is what I'm really wanting to see, and in the payment processing space, well, I am expecting growth. So to check for consistent growth, I look at the book value per share, the earnings per share, and the operating cash. The highlight here is definitely the earnings per share. Now, we have to remember that in 2014, the company split away from eBay, so that's why we only have information back to 2014. It is possible to go back and find PayPal's performance prior to the split, but I don't think it's necessary. The earnings per share shows that the company can be predictable, and I like predictable companies. It makes the investment far safer. Now let's see if the company is well managed, and we can't just go and have a meeting with the CEO and the CFO to see whether they're making some good decisions, but there are some clear indicators in the financials to see whether they are doing a good job. So I like to check for return on equity, free cash flow, the cash on hand, and whether they have a dividend. Cash in the bank is important because it allows for interesting opportunities. Maybe they can acquire a competitor. Maybe they can pay down their debt and improve the book value for shareholders. Maybe they can pay a bigger dividend. All of these are good things for us. Now, I thought it'd be interesting to compare Microsoft, who are hoarding over $130 billion in cash, to PayPal, who are keeping about $10 billion in cash. So with Microsoft, its cash on hand is $133 billion in relation to its equity of $102 billion. That gives us a 1.3. And PayPal's cash on hand relative to equity is $10.7 billion to $17 billion, which is a 0.6. So when comparing Microsoft and PayPal, well, PayPal is not hoarding the cash anywhere near Microsoft. Look, it's totally okay, but Microsoft is just on a totally different level. Now, as you can see, the return on equity is okay at about 14, and anything above 15 is actually quite good. And there is no dividend from PayPal, which is fine. Dividends are normally just a bonus, and I'd much prefer to see companies use their money to be paying down their debt anyway. So I think they do get a tick for this criteria, and they really only just scrape through this test though. So is PayPal a good company to invest in? Well, before I show you my toaster, whether it's approved or denied, I'm actually still on the fence. So let's go check the intrinsic value for PayPal, and then maybe that helps me make a decision. Okay, so let's dive into my intrinsic value calculator. And if you want a copy of this exact same intrinsic value calculator, well, it's free and it's in the description below. Now I've put in 20% for the discount rate. Now that gives me 15% with the margin of safety. The multiple I could sell it for is 15 after 10 years because it's a strong company. I've already done the operating cash flow, maintenance, capex number, and the shares outstanding. And the number I get to is $55.11. Now that's the price I'd like to buy it at. Now before we go on any further, let's just have a look at what the prices are on Yahoo Finance right now. And for PayPal, it's $170. So let's not even bother with the next few steps. Okay, so is PayPal a good company to invest in now? Now, don't get me wrong, PayPal is showing a lot of the signs that I look for in a really good investment. But in a very competitive space against some big time competition, I just don't feel 100% confident about the long term. Now, I calculated intrinsic value at about $125. So if you're interested in knowing what I did there to find intrinsic value, I actually just used my normal calculator and I just used the discount rate of 8%. And as you saw from the current stock price, the price has just gone too far. So let's just say the company can continue to grow at 15%, as the analysts suggest. Well, in a year's time, the fair value will be 15% higher, right? At $143. Now, this reminds me of Chipotle, where if I was to invest, I'm paying a price that the company could be worth in 4 to 5 years' time. I'm not paying what it is worth today, or am I getting any margin of safety? And even if I was a little bit more confident, the share price is just so far above what I'd be willing to pay that it just makes no sense. But that's the thing with the stock market. It doesn't actually make a lot of sense in the short term. But eventually, the true value of businesses are represented. There are good companies that sometimes give us prices of 50% below their intrinsic value. And I want to invest in these companies, not at the companies that have already reached their fair value or have even gone past their fair value. So to summarize everything, PayPal is a solid company and is performing really well. I also think that PayPal has a lot of tough competition, but their expansion plans into Asia and South America is a big opportunity. But at the current price, the upside is already factored in. I really like to use Mohnish Pobrai's saying for an investment where he says, heads I win, tails I don't lose much. Well, in this case, I think it's more of a heads I don't win much and tails I lose. So this is not the investment that I want to make, and I'll have to keep looking for other opportunities. Don't forget to hit subscribe if you enjoyed this analysis, and I will see you in the next video.